Okay, hey everyone, it's Mike Baltos again. I'm the founder and trader at Orderflows.com, and this is the Orderflows Delta Scalper with Goldman Sachs and CME stock for August 30th, 2016. First, a brief disclaimer. Even though this presentation is about equities, this is my standard futures disclaimer, which basically says past performance is not necessarily indicative of future results, and don't trade with money that you need to live on. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Don't trade with the rent money. The tools used in this presentation are the Orderflows Delta Scalper. It runs on the NinjaTrader trading platform. You can download NinjaTrader for free at www.ninjatrader.com. The Delta Scalper is available on my website for a small one-time charge. And yesterday I was talking about Apple stock. The other day, there's been interest in order flow indicators on equity markets, and the three stocks that I used to follow were CME, Apple, and Goldman Sachs. Well, and JP Morgan, but that stock is always struggling. I know people that have been, worked for Bank One before Bank One became part of JP Morgan, and I think their shares are still underwater from, the 90s. But anyway, that stock is a bit of a laggard. Honestly, I haven't even looked at that stock price in a long time. The only thing that keeps me off of JP Morgan stock is, the fact that they're always paying out these big lawsuits, billion here, 5 billion there, 10 billion there. Imagine what their earnings would be if they weren't keep getting fined all the time. But anyway, so again, the other day I ran the Delta Scalper in real time on CME, Goldman Sachs, and Apple stock. And the other day it gave some very nice signals in Apple shares, and nothing in the CME and Goldman Sachs stocks. Now, I said I'm not a stock guy. I'm a futures guy. I trade futures. But if these will work on stocks, I think that would be a great tool that traders can use. And yesterday, August 30th, there was, ironically, signals in the CME and signals in Goldman Sachs, and there was no signals in Apple, which, the other day there was a signals in Apple, but no signals in Goldman Sachs or CME. But anyway, you can only trade what the market gives you. If it doesn't give you any signs, then there's no reason to trade. And what happened was, this is the CME stock from August 30th, around 11:20. You get a nice buy signal here. This is what was that one? The 106.85, 106.90 level, and it shot straight up to the 107.20s, above 107.15 for quite a while. Yeah, it did come off, tested back down to the 106.90, 106.85-ish area before taking off, for the rest of the day. Now, I'm not someone that's going to say, yeah, you could have bought here and sold up here. Honestly, if the way I trade, I catch this move, starts to come off like this, this is where I'm getting out. Maybe I write it down a little bit here and, get out here. But I'm not looking, I said on a 1-minute chart, I'm not going to buy it at 11:20 and hold it until 2 o'clock in the afternoon. Come on, it's a 1-minute chart. You have to have a short time frame view of the market. He said, yeah, it's beautiful when it works out like this, but be realistic. If you're trading a 1-minute chart, you're not looking to find a signal on a 1-minute chart and hold it the entire day. That's just nuts. There's people that maybe do that. I don't know, but not me. You get a nice shoot up right here. It's a nice profit. You can get out. So start to come off a little bit here. Maybe you hold it down to here and wait for something to come back up. Where your stop is below this level. So, even if you, want to hold it, for as long as you can, your stop should be just below your entry price. Ideally, realistically, you should be trailing your stop. And, if you're getting out, if your stop is down here below 106.85, you wouldn't have been stopped out. You could have caught that move. But again, that's not my style of trading. Depending if there was any signs in the order flow, I said, I'm an order flow trader. I look at volume footprint charts. I like to see signs in the volume footprint of, maybe the market's coming off. But, I have a hard time now going back to the normal bar charts. But when I see things like, golfing, something like this red bar right here at the end of a move, usually that's a sign for me to get out, based on candlestick analysis. But, realistically, 107.15, I mean, you're looking at a nice move there, very quick, you're in and out, 20 minutes, not even, 15 minutes is, you could be in the trade. And, but not all trades worked out. Goldman Sachs, this trade didn't work out. This was what time is that? About 12:35 Chicago time. We had the swing high, start coming off. Then you got a sign in here, a buy signal, and it didn't work out. It stopped you out. You got stopped out here. I mean, I'm not gonna not show this chart because it's a loss. I'm gonna show it because this is the one signal you got, and it didn't work out. Now, getting back to knowing how to trade, right? You wish every signal would be like the CME stock, right? You wish every day would be like this, but unfortunately, there's days like this. Now, having a decent, stop price, your entry price is somewhere in here, 167. I don't know what that is, 85. Maybe you have a stop, at 167.80. Give it a little bit of space down here. You get stopped out. Are you willing to risk, this, this right here, this little stop price, to get moves like this, or even I don't want to say this. I mean, that just looks too good. But are you willing to risk, have a tight stop like this, potentially catch moves like this, right here from 106.90, we'll call it to 107.15 within a few minutes? Yeah, I would take these types of trades all day long. Take the small loss to catch, take a 5 with stocks moving, a 5-cent loss, to catch, a 30-cent winner. I would do that all day long, every day, for the rest of my life. I mean, I do that actually in the equities. In the futures. I have relatively tight stops, and but you have to have stops in. I mean, yeah, people say, well, yeah, it came down and then went back up. I mean, you're not going to have a stop way down here. Your entry signal is in, the 167.85-ish area, or 90. I can't see on this chart right here clearly, but, it's somewhere in here. But, it never was in your favor, and it just stopped you out right away. These are the best types of stops. I think the ones that just stop you out right away. I don't like the ones that sort of go sideways on you. I prefer to, either make the move up, when you're buying like this, or just come out and stop you out pretty quick and, move on, get it out of the system, and, just look for the next trade. So, the day before, we'll look at the video from the day before with the Apple stock. There's some very nice winners. Today, there was a nice winner in the CME, and, a small loser in Goldman Sachs. So, I mean, if you can't add, if you're interested in a Delta Scalper, you could just visit my website, orderflows.com, and you can find out more information about it. Again, I said this is only 2 days of analysis, on 3 stocks, and so it's by no means is it a comprehensive analysis that you should go out and start trading around. I mean, you should try and test it more and watch for more examples. I'm going to, going forward, yeah, I'm going to be watching more examples of this. So, and, hopefully things will, appear like this. I said, I'm a futures guy, but hell, if I'm getting moves like this, daily on stocks, I'm going to be all over it. I mean, I hate to, I spent 20 years in the futures industry, but honestly, these are nice signals. This one, yeah, that's fine. I'm fine. I mean, not every trade is going to be a winner. People will run it on something and think, oh, hey, I lost money on this trade. Yeah, so what? I mean, you have losers. I don't like to say, it sounds very cliche. Losing is part of doing business. I hate losers. So what I want to do is I want to minimize the loss. I want to contain them, as small as possible. And I want to have the winners be nice big winners. So, again, to, just to sum up, I said, it's been only 2 days on watching stocks, but, so far the results have been very, very encouraging. I'm going to start watching more. Somebody sent me an email with, how to find some decent stocks. We got decent volume coming into the day, so I'm going to start looking at that a bit more and sort of broaden out my my analysis. So again, thanks for watching this video. To learn more about the trading softwares that I use in this presentation and how you can profit from order flow trading, visit www.orderflows.com. The Delta Scalper, which is the tool that I used in this video, is, you can see it on my website, Orderflows. I have a standalone website called deltascalper.com as well. I should probably put that, the link is below this video anyway, so if you want to watch it, you want to check it out, go ahead. But hell, I mean, honestly, days like this, this is beautiful. To me, this is beautiful. Like I said, I like to have tight stops, and I like to get stopped out. If I'm going to get stopped out, I want it to be fairly soon. I hate these long, drawn-out trades. If it gave me a buy signal and it just sort of sputtered like this down here, I wouldn't like that. I'd prefer if I'm going to get stopped out, it happened quick. It's like pulling a Band-Aid off of a wound. Do you want to peel it off slowly, or you just want to rip it right off and be done with it? To me, this is ripping the Band-Aid right off. An old colleague of mine from Commerzbank, Pavic, you guys probably see him on CNBC and Bloomberg and stuff like that. But he was, we were talking about errors and losses, and you're going to have trading errors, or trading losses, and it's going to be a certain percentage of your trades. And if you get that, that error, that loss out of your system, then hey, that's great. So you should be looking forward to your next trade, because you just had a losing trade. And so ideally, if you're playing the percentages, you should start looking forward to some winners. Now, of course, that's not mathematically sound. I had a friend who I tried to explain that to, who's one of these math geeks, and just sits there and shakes his head. But you know what? In trading, things like that keep you going. It's that belief that you're looking for. You have this losing trade. Okay, you get down. Maybe just right around the corner, you're going to get a nice trade like this. If you're a pessimist, trading is probably not for you. It's better to be an optimistic person than a pessimistic person when it comes to trading. So anyway, thanks for watching this video, and I'll see you on the inside. Bye bye.